Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, March 5th, 2025. I hope you guys are having a great day. So let's review the morning notes and just see how that could have helped your trading out. And really, the first thing is this, where I said, let me emphasize, be careful shorting at these levels. And the reason why was we had I've been showing you the heavy support levels below, and we've seen panic hitting this market. But another thing is, the catalyst that pushed this market lower has been the tariffs, and the market didn't like them and they went down. But the issue with getting aggressively short on something like that is they can be reversed in 5 seconds, and that's pretty much almost what happened today. I didn't do a full read on what took place today as far as with the tariffs, but I heard it had something to do with the car industry. So it wasn't like a full-blown, okay, we're putting these tariffs on hold. But even just that little piece of it sent the S&P up 100 points. Now, if they come out and he says, Canada and Mexico reached a deal, the tariffs are off, you can see the market up another 150 points. So that's the reason why it's really, really dangerous shorting that kind of news, because it can change instantly. And as I've been saying, Trump's one of the probably biggest followers or fans of the stock market than any other president in history. He pays attention to it all the time. So, like I said, if it was going to keep going down, he would have just paused the tariffs, and then we would have seen the market up 300 points. So that shorting that kind of news is really, really dangerous. Shorting inflation, where they're not going to be able to push it down in a matter of one interview saying that he's taking the tariffs off. When the Fed is raising rates, they can't just stop and reverse it unless some catalyst happens that they have to. So this type of news is not. You can take short scalps or short swings real quick, but you have to be in and out. And then when we're at support, you have to be able to look both ways. So I finally said, I'm not calling for immediate reversal. We may even see another test or break of the 5730. So let's take a look at what happened here. So I'm going to move it over to, no, that's not. Hang on one second. All right, bear with me. Okay, so here you go. This was the low from yesterday. We came back down, tested these lows, held them, and then we shot back up. So this is why I'm saying, in this area, it's really, really dangerous to be, to be shorting the market, because we have, we know where the support levels were, and especially when you look at the daily chart or even the weekly right here, this is your buy area right in here, and people that are getting aggressively short, they're just asking for trouble, because they're going to be getting short right at what a lot of, let's say, retail traders, or weekly is more on the professional end, but a professional support zone. And you're getting short at the 56.50, and from there, when the S&P is up to 60.50, you're not hanging on to your short position. So you pick and choose where you want to actually look to short. And this was another reason why I was saying be very, very careful shorting, because we had some panic here. We haven't seen the VIX above the 24. It's only done it a handful of times, and from there, it's led to pretty big rallies. Now, I think that I'm not even going to try to make a long-term prediction on it, but I just don't believe that the bulls are going to have it as easy as they had, say, for the past really 8 years almost, because the valuations have gotten to a point where, like I said, fund managers are going to have to start unloading some of these, these stocks that have huge valuations. But the problem is that these stocks that have these huge valuations are also the only stocks that brought this market up. So they need to find more participating stocks than people being able to buy into that before, we're going to see this. This volatility stop. And I don't believe we're going to see it stop anytime soon. But we're also, we're going to get big moves where Oh man, I don't know what I do with my charts here. Hang on one second. All right, pause. Okay, let's go from here. So, I still think these lows will be taken out, and eventually we will. We're probably going to come back and we're gonna take this out, and I wouldn't be surprised to see the S&P trading down at the 5400 or possibly even testing these lows right here. But that's down the road. I don't believe anything is happening right now, and during this time we're going to get some really really big moves along the way. So right now, is there a chance that we could see the S&P trading all the way up at these levels? There is. I don't right now. I would say the first zone. I would say the first area that I think that you're going to see the bears come in and try to defend is going to be anywhere. It could start right here at the 59.40 or come up to this 59.88. This is heavy resistance because you can see it failed right here. It came up, tried to get through, failed again. So this is really the area that if we get the bounce, this is where I would anticipate it. Now, the one reason why I'm not saying this low is in right now is we don't have any bullish divergences here. So what may make sense, let me move to my other chart, the 15. Okay, so what may make sense is we're just going to do an ABC move, meaning that this is our A, this is the B, and then this is the C. And you can see that it only takes us up to the 58.75. That's if we just did 100%. Now, what we can do, we can see a 123 or a 138 retracement, and that's pretty much pretty close to where the resistance is. So that's another thing. And then once we get there, I think we're going to be heading down. But this right here, see how everything is coming up? If we come down and now we take out those lows, and let's say, God, we take out these lows and then we come down to the the 56.41. That's where I think. But I really do believe that the month of March is going to be very very sloppy and it's going to be taking people by surprise. But if we get that type of move that I'm saying where it comes out and it takes these lows out and then finds support anywhere from the 5700 down to that 5765, we're then going to have buy signals in place. We're probably going to see more panic in this market, and from there it will set up for a much much larger move. So coming from the 5700 or the 5665 and seeing a move come all the way up to the 59.88, that's going to be a massive short squeeze, and we know the way they do that. They do it in a very very fast manner. So are the lows in? Maybe. I'm not. If they're not, they're gonna solidify this buy signal here. If they are, then we're probably going to see some sellers waiting at the 5900, and then we just have our regular fib zones. But I would think that we'd be making it up to the 59.88. And again, on the downside, 5700, and then we go down to that 56.65 level. So for the day today with the fund, we had a pretty decent day. We finished up $6,325. This trade was actually mentioned in the trade room, and it was a very, very easy trade because when we were coming down here, I sold the 60, I'm trying to think what it was, like the 60, 56.40 and the 56.20. So we never even came close, and then we started rallying up. I took a little bit of a larger trade on that one because I was pretty confident that we weren't going to be crashing on this. So I bought 30 contracts. We got, I think it was $2.10 for them, and we had it was a very very easy trade. I wasn't even worried about it. I just put a stop at entry, and I had to go do a couple things, and I really was not concerned at all that it was going to be taken out. So good day today. My one suggestion would be just stay on your toes. Whatever you think is going to happen, there's a good chance that something else is going to happen instead. So with that, have a great night, and I'll talk to you guys in the morning.